Spring 2025 is shaping up to be a season of uncertainty. Markets remain volatile and grain prices are trending higher due to tighter than expected supplies. With so many unknowns ahead, you need a reliable partner to navigate the challenges. At Advanced Trading, we specialize in creating customized marketing strategies that protect your operation and help you succeed. Stay ahead of the markets with the trusted experts at Advanced Trading. Advanced Trading, you never stop working, and neither do we.
Welcome. Thank you for joining us today as we discuss the March WASDE here. I've got, as usual, got Brian Basting, Jeremy Strubhar joining us today. Trying to come up with what we're going to talk about, to be fair. Kind of an uneventful, as expected somewhat, USDA report. Corn down a couple cents here as I came into the camera room here. Beans off 4, wheat down 6 to 7. So we're recovering a little bit of what we sold off on kind of the peak of the tariff discussion. While there's still plenty of unknowns with that, market seems to be maybe adjusting a little bit back to the fundamental picture. And on corn, still relatively tight in the U.S. Beans, maybe a little more emphasis on some of the uncertainty in the trade war, as on top of us seeing progress in South American bean harvest to what seems to be a pretty good crop. And we'll dive into a few of those subjects today as we got some answers from the USDA, or at least confirmation on some of those production current outlook. So Brian, let's change it up a little bit today. Let's start with wheat. USDA, few changes across some of the major exporter wheat production that I think you've been hinting at the last couple of reports. What do we see?
The Aussie crop, Nate, was up 2.1 million tons compared to February. Now, they only increased their exports 1 million tons, but that just confirms that we're going to be looking at some stiff competition from the Southern Hemisphere coming up this spring. In fact, Nate, if you combine the increase in Australia and the increase in Argentina versus a year ago, it's about 9.5 million tons of wheat. So that's gradually working its way into the export pipeline now as you get into mid-March. But from mid-March, I would say until mid-August, that supply is going to be the dominant supply as the Northern Hemisphere crop runs out, Nate, because the European Union, USDA, reduced their exports 1 million tons today.
Okay.
So, and they actually cut Russia's exports 500,000 tons. So you're seeing the Northern Hemisphere supplies decline here, Nate, and you're seeing those Southern Hemisphere supplies take center stage. So I think we're going to have some opportunities here in terms of U.S., but the USDA acknowledged today that we're still the residual supplier. They lowered U.S. wheat exports, Nate, 15 million bushels today.
So kind of just that slow grind lower that we've continued to see. What's that put the Aussie crop at compared to some of the private estimates, some of our contacts down there? Are they closing that gap, or is there still some potential upside?
I believe this was the ABARE number, Nate, at 34.1.
Okay.
And so that's a bit higher than what we'd heard. Not a lot, but a little bit. And not as stout as what it was a couple of years ago when it got to be 38, 39, whatever that record was. But regardless, it's a stout number, and real good yields in Western Australia and New South Wales. So they're really going to be in a driver's seat export-wise the next 3 to 4 months.
And kind of neutral U.S. weather. I mean, probably a little drier than we want, but still a little early to start trading that. But soon we'll be focused a little bit more on kind of the HRW, SRW coming out of dormancy here, and what if we see some rains, and that could obviously impact the crop or the board as well.
We're seeing that drought monitor starting to show some abnormally dry conditions, Nate, across Oklahoma, Texas, more of Kansas. A little disconcerting. Now, we don't want to kill the crop necessarily in the middle of March, but we certainly would welcome some good precip here the next 45 days as this crop comes out of dormancy. And I think we still have full potential there, but it certainly is going to get more sensitive when we turn that calendar over to the 1st of April here at the end of the month.
Sure. All right, Jeremy, a little bit on the bean balance sheet, unchanged.
Correct.
On carry out. Advanced Trading still using a slightly higher number between a lower export total and a slightly lower crush. So I think we're 40 million bushel, give or take, higher than the USDA. No changes South American production in today's report. Not a huge surprise there. Still maybe some private estimates that are a little lower on the RG crop. They're seeing a little bit excessive rainfall. Now it's drying out. They're progressing in their harvest. But I think the bigger uncertainty is the tariff impact. And, not too long ago, kind of remembering what 18-19 looked like for our bean market. One of those years we had almost 1 billion bushel carry out. So the market still seems to have this, as the tariff discussion continues, as China seems to be unwilling today, although I know there's some scheduled meetings between Trump and Xi as we move forward here. Today, we saw a smaller carry out in the world ending stocks, but really kind of feels like a comfortable outlook. What should producers maybe be looking at as we talk about some of the year-over-year changes in South America, and as we start to transition into the U.S. planting window here, now that we have insurance prices established? What can producers maybe look at to manage some of this risk?
Well, as you mentioned, we are about halfway through the Brazilian harvest. It looks like the Brazilian crop's going to be approximately 10% higher than last year. So we do have plenty of beans in the world. The big question on everybody's mind is how many acres will the U.S. have, and what will the report on March 31st say? But between the tariffs, the acreage, South America's crop, there is still a tremendous amount of risk and volatility that we could see. We could really see beans go up or down a couple of dollars. So it makes a lot of sense if you are a producer and still have old crop beans to put a floor on under them in some fashion. If you have them commercially, let's just sell them. Buy a call. The cost of storage and interest outweighs the return from the carry. If you have them on farm, more than likely we would advise doing the same, selling them and buying a call. But there is just enough carry. If you aren't borrowing money, it may make sense to buy a put to establish that floor, but keeping the upside open.
Okay, I liked your comment on dollar moves. While that maybe seems hard to digest today, I totally agree. Just because of the unknowns. If we saw an 82 or 83 million acre bean total, maybe that's towards the low end, but some of the higher end corn estimates would suggest that. I don't feel like the profitability, I'm not anticipating that, but there's still plenty of unknowns. And then the flip of that is, right now, the trade war seems to accelerate the risk of us not having an export program. But in the middle of that, there's some underlying tone on what Trump's promise to the U.S. producer. Just bear with me. We've also got some changes in our domestic demand, more crush plants online. Do we see some type of policy that favors our domestic use? And or how long can China continue to just push back? If at some point we saw a trade agreement signed sooner than we saw in the 18-19, 2.5 or whatever, however many years it took at that point, that could change things very quickly. We're already seeing Brazil basis, I'd say, react to the idea of more of a captive Chinese market with tariff implications from the U.S. We saw Brazil basis from about 50 cents last week, kind of came down as we're in the gut slot of harvest and there's a lot of supply available, but just a lot of unknowns to your point, to the producer to manage risk. It doesn't feel like a time to just sit on our hands, especially with volatility, I think, heading into not only the intentions, but pretty key periods of weather across the U.S. and South America. Shift now to corn a little bit. Brian, corn balance sheet, like soybeans, unchanged. Didn't maybe see the export number that some of the trade had been anticipating. We still have strong sales on the books. Feels like the tariff environment is less impactful on the corn U.S. balance sheet. I guess I'd say that, given still record tight world availability or competitor export stocks. So if the world needs corn today, they kind of got to come to the U.S. until we get a little more confirmation on South America. What did we see? Any changes from the world supply? Because we did see ending stocks down a little bit.
We did see ending stocks down a little bit worldwide, Nate. Amongst the competitors, Russia, surprisingly, they reduced the Russian carry out by 550,000 metric tons, reduced Ukraine by 100,000 tons, and reduced Brazil by a little over 120,000 tons, so 120,000 tons. So nothing earth-shattering there, Nate, but maybe just a little bit supportive of U.S. exports for the second half of the crop year. We've just started the second half of the crop year, and I think we still got a real good book in place for this old crop. I think we still got that potential to nudge that export number up. I would remind the viewers, though, Nate, we got a critical report coming out on the 31st this month, that grain stocks report. It always seems to take a back seat to the prospective plannings report.
Right.
But if we get confirmation on that 31st, Nate, of another quarter of disappointing feed residual use, whether we fed more meal or whatever the case may be, that's going to be a real wake-up call to the market that we may not achieve that feed residual number. So I think you made a comment a couple months ago. There's a real good one. You know, when we saw that bullish carryout number in January, that may be our low carryout number of the year.
Yeah.
We'll see. There's a lot of stories, a lot of chapters yet to be written. But just to remind the viewer, it's not just the prospective plannings report on the 31st. It's that grain stocks report too. But bottom line, I think we're still in a good position to be the major exporter here. Argentina crop is going to start working its way to the pipeline soon and provide some competition. But regardless, I think producer really, and Jeremy can expand on this, really wants to be in a position to defend that corn balance sheet, because you still had a nice rebound rally, as you said a moment ago, in corn futures the last week.
Right. Don't get too focused on what we sold off, back to levels. Profitability's still a little questionable on new crop, but obviously just to highlight some of the risk at the end of the month. A bearish combination would be the fundamental picture you highlighted, which we saw, potentially small indication. We don't talk a lot on Milo on this webinar, but at the end of the day, we've continued to see the USDA reduce the Milo exports finally and throw that back into residual. Today, they reduced 70 million bushels on the export total, threw 50 of it back into feed residual. So at the end of the day, Milo carryout highlighting some of the replacement of corn demand. And end of the month, do we see, we could see a corn acre or a corn carryout grow a couple 100 million bushels, maybe 100 million bushel. Maybe they increase exports a little bit to offset that. But if you combine that with a 95 or a 96 million acre corn number, you start to get a little more confidence. Now, weather in Brazil is not ideal right now, but we're still a little early from kind of the key impact of that, right? That's more,
I would say, roughly, it's a big country, but middle of May would be the equivalent here in the Midwest.
okay.
The next 45 days between now and would be our 4th of July. There, end of April, critical time, pollination.
Yep.
And then the dry season starts around May 1st for Brazil.
So they got to get those rains before that, and that can throw a wrench in all this discussion. All of a sudden, that shifts things because of the tight availability around the world in corn.
Another ingredient for that recipe for volatility. Nate.
Right. And managing it, Jeremy, what can producers look at today? We kind of sit here, sell off, get some momentum back, seeing, I think, some basis improvement around the U.S. Farmers seem somewhat disengaged from, a heavy selling rally, Jan and into early Feb. So what does a producer look at today for the remainder of old crop, and then starting to talk a little bit about new crop, because we've got that crop insurance price established now?
Well, I already touched a lot on the soybeans, but on old crop corn, let's just get it sold. The carry is basically equal to the cost of interest if it's on farm. If it is on farm, look in the May, June, July timeframe, talk to your advisor, figure out the best time relative to your own interest rates and costs. But more importantly, let's look at new crop. Not a lot has been done across the entire corn belt on new crop. As you alluded to earlier, the crop insurance prices are set. Corn's at $4.70, just 4 cents higher than last year. But if we buy 85% coverage, that's really locking in around $3.99 if we produce our APH. If we produce more, that embedded put is 47 cents lower, or $3.52. If you bought 75%, that's locked in at $3.52. We love crop insurance. It protects the production, stuff that we cannot do here. We advise everyone take it to help manage risk, but it is not a end-all be-all for your marketing. Let's look again some floras underneath this market if you did buy that insurance. And a straight December 440 put today costs around 26 cents. A short-dated July 460 in the money a little costs 22. Now that expires at the end of June. So we still have a lot of growing season to get to. But I like that, especially from the guy that knows a lot of its crops going to town. By that time, we know it's planted. We know it's emerged. And it's a good time to start making, you can start making those sales and avoiding that commercial interest. commercial storage rate. On the beans, same story. The average price was $10.54, which is actually $1 lower than last year. But the crop insurance is protecting us at levels below $9. If you have 85%, it's $8.96. 75%, it's $7.90. You have a long ways to go until the crop insurance catches you if we are in the bearish market. So I like the $10 November put at 47, or in the short dated July at 24. 24 cents in beans in the growing season. That's just a one-day move a lot of times.
Right.
Let's get in that floor in case tariffs. We don't know when the weather is going to be. Let's keep that upside open. There's just so many unknowns. Let's set a floor, but let's make sure that upside is open so we don't lose opportunity.
And timing wise, I mean, I think you probably want to look at some of this stuff and get some coverage in place here going into the month report. I mean, do you feel like that's my simple mind, I kind of always view that acreage, like you said, Brian, that's the focus. The stocks can be a big part of that, but it just feels like with this board price and these tariffs and the unknowns, going into this environment, I don't want to be naked on my coverage, which, crop insurance helps like you hit, but we didn't see inputs come down like producers potentially expected here. So we've got costs associated with this, and albeit dry, some, the drought expansion, some of the Western Corn Belt with some rains this last week still favors at least today's picture on getting corn planted. I mean, a lot's going to change before the tractors rolling, the planters are rolling, widespread, but today we don't have a ton of snowpack and a melt that we got to get through in the northern plains. So I think guys are getting ready to get going, and the weather conditions, at least today, are favorable to get a crop planted. Feels like that's some risk in our current price environment outside of all the stuff we don't control. So get a little more interest in that, kind of punt to the end of the month report, see if we get any excitement there. In the meantime, get that old crop managed and get a floor underneath your new crop. Thanks for joining us today. Next report will be the big prospective plantings into the March 31st. ATI Pro Media every day at 9 a.m. if you guys are looking to join that. Appreciate the time. Thank you.